high. A quick educational clip here about DPI, which is an acronym coined by Matt from Squeeze Metrics, dark pool interest. Dark pools are OTC markets, over-the-counter markets, which are private markets. They're not lit markets that you or I can trade in. Large hedge funds, retirement funds, and smaller dealers and market makers also use them. Those funds at the end of every day, to make sure that they're transparent, have to report to FINRA, which is an agency under the control of the Securities Commission. They have to report the number of short sales they made in volume and the number of those and the total volume of trades that were made in their dark pools or in their over-the-counter trades for each of those securities for the day. Those volumes are collated by FINRA and published. They're publicly available. Over the years, there's been lots of academic papers for sort of 30 or 40 years, academic papers and discussions about is there any alpha to be found in over-the-counter markets, and what is the use of the short trades? Why do we need short floats? Well, the reason we have short floats, obviously, is because there's a market maker there providing liquidity. And if you want to buy something, he's got to have something to sell. And if we want to have a tight bid and ask, the indexes, starting with the NASDAQ in 1989, decided that we were going to offer a commission to each of those market makers rather than market makers just trying to take the spread. They would offer a commission, and that would tighten the spread substantially. And it has. Most of it is now algorithmically traded, those offerings by market makers. And at the end of each day, when those positions, when the market closes, they supply those. We do a little quick calculation. We look at anything that the market maker has reported as short as being long. The reason being, if the market maker has a short sale, someone is buying on the other side, so we consider it a long position. So there's two things about that. We think in the non-optional markets that it's probably representative of trading. There's a lot of discussion that goes on about whether it's because people don't want to be seen because they're hiding some facts or something like that. Could be all of the above, but in the markets that we deal in, which are optional and shortable markets, we find that there's three clear actions that are happening in DPI, and this is just a quick video to show you about them. The first is accumulation. Now, accumulation we can see with these two in green here with these bulging curves. What we find with accumulation is that we have an upwardly convex curve above with DPI matching it during a period of accumulation. But the price action, which is the center of these three lines in all of these little descriptions here, the center of these three lines, price does not have to be going up. So although there's people buying, the price can still be going down, or the price could be flat. And then on the bottom, the gamma, generally, it's convex, but it's the bottom bulge of the convexity is at the bottom. It's opposite to the accumulation convexity. And what this shows, although there's a little bit of a rise in gamma in the center there because there's some hedging happening there, that gamma is not specifically rising because there is not enough price action for the market for the gamma to rise, which is the delta hedging component of a measurable way of looking at the delta of options hedging. The next part we can see in DPI is the hedging part. Now, hedging, obviously, they hedge up and they hedge down, and when it's flat, they don't have to do any hedging. So here in a rising market, we can see that DPI is rising at the same rate as price and at the same rate as gamma. And here in a falling market, we can see that DPI is falling at the same time as price is falling and the same time that gamma is falling. So that's the second sort of DPI that we can quite easily see. And the third one we can see is distribution. Now, this is harder to see depending on the security. It is not as obvious. But here in gold miners, we can see a bit of distribution here. where the price is rising, the DPI is rising, but the price and the gamma are both dropping. Now, this diversion here between the different actions of the three elements that we're describing here, this shows us that there's something odd going on, and here it is. There's an even bigger market maker in the game, providing a market maker for the smaller market makers and the dealers by buying stocks back from them. And so when he reports, this larger market maker reports at the end of the day to the FINRA, he reports that he was selling into the market, so it's represented here. When we turn that upside down, it's represented as a long position, which is seemingly incongruous with what's happening in the price action and the gamma action. Let's just have a look at that. Let's just have a look at that in another ticker. Now, the reason I like this ticker is that it shows beautiful. Oh no, we've got Apple here first. Let's just change this to FCX. This ticker has all the market makers that it's supplying to these tickers. There's obviously lots of dealers, and it's a very heavily traded copper share, Freeport. It has a beautiful distribution, and very regularly you see this distributive DPI. So here we have rising DPI, falling price, and falling gamma. There's a little bit of topping action here again. Here again, we can see rising DPI into this falling market. There's a little bit of hedging going on in the centre, but generally we get these beautiful rising. Here we go. We've got a little bit more rising here, sinking gamma, rising, sinking gamma, sinking price. And here we go. We can see there's a little bit of buying here in the bottom of this market. Here we can see a little bit of accumulation here. So we've got a flat price, but we've got DPI going up when hedging requirements aren't really needed. So that's the FCX. The third one there, I just wanted to show you, is Apple, which has a very different market. It's much more like Bitcoin. It's held. People don't tend to sell out of it, so it has this very reactive DPI. You can see this market here. We don't see at the top of this market. Maybe there's a little bit of distribution there, but not a lot. We can see a lot of hedging activity going into that. You can see maybe there's a little bit of buying activity here, a little bit of accumulation here. Maybe there's a little bit of distribution there. Again, we can see a little bit of accumulation here, but they tend to, once they're into this market, this is a particularly low price, and although there's a little bit of hedging needed there, was there that amount of hedging needed? Maybe there was. This isn't a volumetric ratio. It's not on the number of shares that were traded, just the ratio between the number of short and long sales. So this could be a very, very small volume, but very high in DPI. But then as we can see it going along, because these positions are held constantly for the majority of the time, it's just jumping up and down with the gamma, the hedging requirement that's needed, and staying pretty flat, just going up slightly. And it's an interesting share. We do offer we do offer DPI in groups. So if you were to look at any particular index, as we were earlier, we could go and have a look at. Big technology. So this is a group of shares, slightly bigger than the FANG grouping. Just so we can get a bit more of an average. So this is an average of them stuck together, and it's represented here by the Qs. And again, you can look at any of these times when there's this. These people haven't left the market. They've stayed in the market in most of these stocks here as the stocks have gone back, and then you can see some hedging again. But generally, you can see there's just a lot of hedging going on, and distribution and accumulation is harder to find. And we can find them and we can see them when we're looking behind the market at the open interest, because the open interest is the prescient, it's the leading indicator. So the positions have to be formed before we see the effects being price and gamma, and the other Greeks, Vanna and Charm. those positions have to be there first. But anyway, that's in another video. I hope you've enjoyed that.